What is going on, everyone? Welcome back to another video, another day, another dollar. We're going to be breaking it down once again with the E-mini futures contract. We're going to be looking at the continuous contract as we did have rollover that occurred on Monday. Only about 50% of the rollover has occurred, so not everybody is trading the new September contract for the futures. I have rolled over and back adjusted just a hair. I'll show you that in the destinations here in a second on the 30-minute. Before we get into it, if you guys do not mind, leave a like down below. Comment how you traded and what you're expecting the market to do tomorrow with the Fed. What are you expecting the Fed to do? Are they going to raise by 25? Are they not going to? Are they going to hold out? Maybe see if we need to continue. We had CPI data come out today, 4% increase over the month of May. So maybe we'll see the Fed tomorrow with a very, very bullish statement, and we'll see how that comes in. So you know how we break it down. We're going to break it down from the monthly, the weekly, into the daily time frame. We got a lot to cover as I did not make a video yesterday, nor did I trade. It was my birthday, so I was out celebrating, living life. So we'll go ahead and get right into it. We'll go over what occurred in yesterday's time frame and then what happened today. But first, let's get into the monthly. Monthly breaking out of balance. We've been wanting to see acceptance over the 4,200 level and then move up and above the 4,300 level, which is a very key level that I've been talking about for the past several weeks now. We did initially have some trouble here above the 4,300. And with the premium and everything cooked in, we have now clearly broken out of balance above that August extremely monthly bounce high. All this at some point is about to be released to the upside as we are continuing to set new highs on the year. And then we're going to begin to gun it for last April's high. We get April's high. This market really has some legs to the upside. So monthly breaking out of balance, really bullish. How is the Fed going to come in tomorrow? Are they going to raise interest rates? Are they going to not? If they're going to keep it at zero, then that might be one of the bullish things possible, and this market is going to boom explode to the upside. As in Sunday's video by Jim Dalton, he was stating that if this market does begin to find acceptance above the 4,300 level and the Fed decides to do nothing, those that are underpositioned will begin to bid this market up as they feel they need to get into the market before it continues to grind up. And typically, after the bear market that we have had, the market usually returns pretty well over the next 2 years. So that might be something we're seeing and the potentially all-time highs again. Now, however, this market could just as easily pull back and fake everyone out and put us into some type of balance once again on the monthly. But for now, the monthly is breaking out of balance to the upside, very bullish. We got a couple weeks left in June to see how we finish up. Let's go ahead and get into the weekly. Weekly. We've been one-time framing up for 3 weeks now. 1, 2, 3 weeks in a row now. We've been one-time framing up. And you can see the little bit of a premium gap there from that from last week's high. So we got a little bit of a premium gap. I will carry that gap forward because I do believe at some point that gap will get filled. But that is a premium gap. We did not gap up on the weekly. We did just, it was due to the premium and the rollover. So that's why you're seeing that. But you can see clearly hit target 1. Next target is 45.09. Target number 2. So we've been finding acceptance above this balance high here, 4,200. We've moved up, hit 4,300. Next target, and there's a void. I mean, an absolute vacuum to the upside to 4,500 if this market can really pick up some steam tomorrow after the Fed. And maybe we have a very choppy session prior to 2 p.m., but after 2 p.m., this market is all, 2 p.m. Eastern, 1 p.m. Central. So after that point, this market's really going to be very volatile. So have your hard hats on tomorrow. Be prepared. But the weekly, very bullish. 1, 2, 3 time frames now. We have been one time framing up. setting higher highs and higher lows. But keep in mind this premium gap here at some point will get filled. Let's go ahead and look at our daily. Look at our daily. And there you have it. So here's our daily. Pull up our daily balance. After breaking out of that daily balance, we've been one time framing up 3 days in a row. Yesterday was not a gap like normal. It's a premium gap, but like I said, we would look to see if it fills at some point in the future. I'm going to carry it forward, but it was not just a overnight gap. It was a more or less premium gap that occurred. But very bullish day yesterday as we chopped around a little bit and then had a trend day up. Today was a legitimate gap as we did open up above the previous day's high, not due to premium like Monday and Friday's close, right? Today was a legit gap where we opened up in this market above the previous day's high. We pulled back, attempted to fill it, but like I said, those that are expecting this market to push up higher and they're feeling that they're under position and the Fed is going to do nothing tomorrow, then on any pullback, they are most likely getting into their loading up into their positions of undervalued stocks or even ETFs. So daily, one time framing up 3 days in a row now. We got a normal gap and then the premium gap we will look to fill at some point in the future. Let's go ahead and get into our larger time or our smaller time frame here, our 30-minute time frame, where we'll look at the profile for yesterday real quick. As you can see, double distribution day is what we had in that occurred, right? Double distribution, just chopped around initially early on, then began to kind of grind up, failing to go trend a few times before late in the evening, we finally get this explosiveness to the upside where we finally grinded up, right? So you can see Friday's close, Monday's open. There is no actual gap here. So on the daily with the continuous, it's just the premium gap. So going forward, keep that in mind. But we did have a double distribution day. All of this range is one distribution, and then from L's low to M's high is the upper distribution. So double distribution, a couple sets of single prints. Then today we come into the market. We come into the market with a gap and do nothing but chop around. Early on in the day, we pushed up, attempted to really get some legs to the upside, pulled back in. The second time frame, B period, pushed down, took out the low, created a very large initial balance. Couldn't quite fill the gap. I had a resting bid sitting down here, waiting for the gap fill. Would have used possibly M's low as my out, reassessed if I wanted to get in near the single print fill here. If they did fill that set of single prints, potentially get in again using the single print fill here as my out. However, we never did pull back enough. I never did get into that position. After that, we just chopped around for a good portion of the day. Wasn't a whole lot interest for me. So I stepped away from the market, and by the time I came into the market around F period, I wanted to buy on an afternoon pullback low dip against value low. And I was attempting to buy on this pullback here in F period. But when we pulled back, I just missed my bid. And then it began to grind back up to the highs. And, that was a missed opportunity there. And after that, I didn't really want to take any more trades. But you could have taken shorts against the high of day and against the overnight high, as this market did have an initial Y point of control. And I can bring up those destinations right now. We did end up creating a 10Y point of control that we did rotate back and forth between this 44, 10, 25 area. A lot of chop back and forth through this area as it was a magnet. But you could have definitely faded against this high here late in the day. Would have worked out because we only ended up with a poor high, as 44, 23, 25 was the high day, only a tick above the previous high, and then we began to rotate back in. Really good liquidation here. as weak buyers that were buying up here looking for a push up higher got liquidated, and we pushed back towards the low, got to the open, and bounced, creating an afternoon pullback low. Another good opportunity to get long against the opening and against the day's low. If you wanted to take that heat, I wouldn't have personally. I might have looked to take the trade on the gap fill or the fade, but it was late in the day and didn't. You never know with the Three Stooges, Curly, Larry, and Mo, what they're gonna do. So on that pullback, just sat around, did nothing, and didn't trade. Nothing wrong with not trading. No trade is a trade also. So we end up with today's high, a poor high, a 10 wide point of control, an afternoon pullback low. Not textbook, but you got to keep in mind, with the way this market is, we only go trend and hold trend like some 30% of the time. So the other 70% of the time we're chopping around, and we need to have references. So afternoon pullback low right here at 44.0250, reference as a target, not necessarily something to lean on. Then we have the low of day at 43.96 right here where the gap starts, and then the gap will fill at the high of day from 6/12 yesterday at 43.8950. So gap fills there, and then if on the downside, furthermore, just to give you guys an update, single prints that start at 43.80.70, they fill at 43.76. Next set start at 43.74.50. Those fill at 43.68.50. Then we have a textbook afternoon pullback low at 43.61.25. And this is what I mean by textbook and not textbook, right? Textbook usually means you have an afternoon pullback low, and then you go trend either to the upside or to the downside. So you either have single prints above you or below you to have a textbook afternoon pullback low. So you can see how we pulled back here and bounced, and then really got the move on to the upside. Whereas this one was a little bit weaker, so not as much of a reference point to lean on as it is a target. Same thing for these single prints. If we were to come in tomorrow and come into the previous day's range here of Monday, and with any acceptance, you'll look to fill, and if there's enough liquidity and enough supply overhead, these single prints will fill. So instead of leaning on them to take longs as you did on that day up, you'll look to backfill as a gap, right? Same thing with this gap, right? You want to see that gap fill. Same concept here on the intraday, as it is poor structure and you want to see it get filled with better structure. It's like a building, right? You want to have more than one wall to signify some type of strength there in that area, right? So single prints, you see where they fill, afternoon pullback low. Then you have the low of day down at 43.51.25, and then 43.38.50. Oh, I got that low of day wrong when I was back adjusting yesterday. 38.25 is the low of day from 6.9. And then on the upside, you have today's high day, 44.23.25. And then I have absolutely nothing for us on the upside, as this is a new contract and I haven't quite back adjusted everything. So with that being said, ladies and gentlemen, have your hard hats on tomorrow if you're trading. If not, sit back, relax, do nothing. No trade is a trade also. If there's no edge, there's no reason you should be in the market. And that applies to myself as well. If there's anything I can explain better, you may want to know how to identify 10 wide point of control, things of that nature, how to identify an afternoon pullback low. Leave a comment down below, ask me something. I will do my best to explain, and we'll catch you guys in the next one. I'm excited. I hope you are too. See ya.